Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show and the company which we are calling. I will give you all the details, but there are some hints to it and it's a consumer related company. Let's point out what are the hints about this company which will be coming in KYC. It's one of India's largest hair oil company, but just wait for it. The second hint is also very much important. It's endorsed by Kiara Advani. I'm sure you'll be understanding which company I'm talking about, but there are more hints to the show. This has posted a very strong Q3 numbers. And also, if you look at the one-year basis, the stock has given a solid return to the investors as well. Stock is up almost, you could say 32% in the last 1 year. And in the day's trade also, we are seeing a strong up move coming in. You must be guessing it, how the overall setup comes in for the company. And the company in focus is Bajaj Consumer Care. Yes, they have come out with their Q3 numbers also, and it's a very strong one and a good momentum is coming to the stocks. But we have got this company in our KYC segment. But the key question remains is why have we called them and why are we featuring them in KYC? There are certain queries which we will be asking the management. What's the volume or the value growth looking like for the company? And what's the future guidance in this segment? The second one is the GST benefits. Will they start accruing more in fourth quarter? And if yes, what will be the benefit coming in? Also, other question we'll ask is, has the rural demand rebounded? It seems like it has in the Q3 numbers, but we'll get in more details about it. Also, another question to ask is the raw material pricing trends, the paraffins, and also the copra prices, how the pricing trends are working out. And it's largely, if you're tracking the FMCG space, most of the raw material costs are benign right now. Apart from that, the international expansion, what's the visibility coming like? Right now, the company is having a very single-digit revenue exposure, but in the future, we might see this going up also. And on the show will be Naveen Pandey, the Managing Director of Bajaj Consumer Care, where Naveen will answer all our queries at KYC. So, moving on, let's just give you some more details about the company, why it's important to understand, what this company is all about. I'll give you some granular details. This company, ये सिर्फ जो है तेल का hair oil या तेल, if you call it, that's not only there. The story is more. There is cosmetics, there is toiletries, there is personal care products as well, and of course the hair oil is there. But there are different varieties of hair oils if I talk about it. This presence is both in domestic and international markets as well. And if you look at it, there's almond drop, it's very famous. We spoke about Kiara Advani as well. Coconut oil is also there, and interestingly, other products also come in. That's gulab gel is there, and henna products are also there. I did check their website, and the product catalog is big. These are the product catalogs. You can talk about it. But net, it's a big product portfolio. But the geographical split I was talking about, still India contributes 95% of the revenues here. Of course, management, we'll ask Naveen about this 5% in the international segment. Of course, the commentary is also coming slightly positive. So we'll be asking this question as well. Now, they are having a project. It's called Project Arohan. This is the first phase I would like to talk about. They have been boosted the retail reach, and of course there are certain areas, Uttar Pradesh and Madhya Pradesh, that's where the growth is coming in. They have also launched in March 2025, that's last year itself. They're targeting Delhi, Haryana, Rajasthan and Chhattisgarh. That means the general trade is being focused at, and the completion is expected by May 2026. When these projects get completed, incremental benefits start coming in to the company, but of course it takes time. Now, they're aiming for 1.6 times urban reach growth and a wider rural coverage as well. This is the second phase which will be focusing on. Of course, this will be happening in the next year. The recent news also is there. There are two of them. There's a buyback of almost 4.7% stake of the company, and that's why you will see the promoter shareholding rising up as well. Also, apart from this, let's look at the other recent news which has come in. There is a demerger of the manufacturing division of Vishal Personal Care, and that's also where we see some kind of value unlocking happening. We had seen a good up move last year in the stock prices, but as of now, we see that largely the numbers are doing the talking and giving a good momentum to the stock. But let's focus on the ratings in our show. There are 8 ratings, which we focus on in KYC. I'd like to point that out for our viewers who are tuning in for the first time. Income statement, balance sheet, cash flow, these are the important number ratios which you have to track as the holy grail of fundamental analysis. Apart from that, shareholding is there, street cred. When I talk about it, that's basically your returns coming in from the stock, be it 1 month, 6 months, or even 5 years. Valuation, we compare that with a lot of its peers. This, of course, includes Marico, Dabur, Imami. I'll get to the valuations and where does the company is placed. That's something which we'll be looking out for. The outlook is very much important for a company like this, especially it's a consumer-related company and a lot of benefits are coming to the consumers and the GST benefits are also kicking in. So that's something which we'll be watching out for. But let's move on to the first parameter to talk about the company. This is the income statement. The three-year CAGR I have taken for FY23, FY24 and FY25. The 3-year CAGR numbers are dismal. That's the concern coming in. It's just single digit and there's a degrowth happening in both EBITDA front and margin front. Of course, the industry had some pressure coming in and the consumption or the competition in this space that has increased. But one thing which caught my eye was definitely the Q3 numbers. That is what the street was looking out for, and the company delivered revenues up 31% on a year-on-year basis. And if you look at the EBITDA and PAT numbers, that's also done well. EBITDA has doubled up to almost 56 crore rupees. And if you could see the margins, that has also gone up really strong. That's 18.3% as compared to just 11.2%. And PAT, 83% coming in. Of course, there aren't much one-off adjustments here, but a very strong performance coming in. So one side, the 3-year average numbers which we took, they were dismal, but on the other hand, the Q3 numbers, if we talk about it, they have been really strong. So I have given this a neutral rating. Let's move on from income statement. Let's talk about the balance sheet. Balance sheet is very much important for a company like this. And let's see what are the key numbers to actually track in the balance sheet. If you like to pull out the numbers, of course, remember there was a buyback. And because of that, some structuring definitely happened, but book value is decent. It's a debt-free company. So that is a very strong point for Bajaj Consumer Care. It's a legacy brand from Bajaj Group. And cash bank balance has also significantly gone up. It's around 112 odd crore rupees. We'll definitely ask Naveen because a legacy business is there. A lot of acquisitions are happening in the D2C space also. And look at the cash balance over here. Either the shareholders get something or some acquisition comes in to actually prop up the D2C segment as well. So net, a very strong balance sheet for Bajaj Consumer Care. So I'll give a strong thumbs up. Let's talk about the cash flows. And of course, there are some lumpiness involved also in this cash flow segment. And I'd like to point out the cash flow to EBITDA ratio. That's been decent. It's not very less also. It has reduced from 72% in FY24 to FY25 is 48%. But the net cash flows, they have been going up from 2 odd crores to 8 crore rupees. So it is still decent. I wouldn't say very great right now because we need to see much more numbers coming in as we go ahead in the next 2 quarters as well. Naveen will answer the flow also of these cash flows. So it's a neutral rating when it comes to the cash flows. But apart from the cash flows itself, let's also look at the return ratios. This is the 4th number related ratio which we get a company in KYC. And largely the concern remains is you need to have at least 20% plus ROCs in an industry or a company like this. But it has been going and it's not been able to maintain it. See around 26, 21, 23 and now it comes to the 19 portion. So that's why we are seeing there's a slight pressure coming in the entire industry, and that's why the ROC, ROE numbers are looking depressed. And because of that, I will be giving this a strong thumbs down. So apart from the return ratios, let's look at the shareholding. We also spoke about the buyback. When the buyback happened, the promoter stake went up from 39%, 41% and now 43%. And whenever promoter stake goes up in a company, it shows strength. And remember, it's a legacy brand, so it's a very good kind of heads up for the markets. But on the other hand, who were the sellers? Institutions, FIs and DIs from 14 to 17%, you see the downtick coming into 10 to 16%. That means the institutional part ownership that has gone down and retail that has gone up. So net, there's definitely a concern coming in, and that's why I've given a strong thumbs down when it comes to the shareholding pattern. Also, let's move on from the shareholding pattern segment to the street cred, how the stock has moved around, what returns have they given. If you're a short-term investor in the stock or a long-term investor, let's see what has happened. Last 1 month, stock is down 2%. And just getting all the numbers, last 6 months, stock has been largely flat, nothing much to talk about. But last 1 year, That is where I think there has been a good momentum in the stock. The stock was up now almost 32 odd percent, and it's going up right now. Also, last 5 years, nothing much if you're a long-term investor. So if you're invested in 1 year time zone, then congratulations to you. But apart from that, concerns are definitely there. And long term, it has not been a multi-bagger. So it's a neutral rating when it comes to street cred for Bajaj Consumer Care. After street cred is the valuations front for the peers. We have done a peer analysis to see where the valuation stands, and it's of course a trailing 12-month P ratio we have taken. And direct competitors, Marico, that's at 58 times. It's enjoying a premium valuation. But on the other hand, look at Bajaj Consumer, Imami, 27 to 28 times. And whenever a rural development takes place, these stocks tend to get more momentum. I'm talking about Bajaj Consumer and Imami. Compare that with Dabur and Honasa. Honasa also has made it to the list. So see the valuation gap which is there. This is almost double, and this is almost, you could say, 5 to 6 times. So yes, there is a valuation comfort coming in, and the company has performed in Q3 also. Because of that, I will be giving this company a strong thumbs up. Apart from valuations, the last one is the outlook segment. It's very much important for a stock to actually understand what's the future lying ahead, and there seems to be some green shoots coming in. The macro signals of consumption, that's coming back. That's what the management had stated in their investor presentation. Also, the second important point is the volume market share growth for ADHO and the non-ADHO segments. When we talk about ADHO, it means almond drops hair oil, and we will be talking about this all time. So this short term, please do remember, it is very simple. It's just an almond drops hair oil. Copra and mustard oil prices, that's how they are trending, and currently they are trending lower. That means the costs are benign. It helps the margins going forward for FMCG companies like Bajaj Consumer. The international business, they expect to see a good growth in Q4 as well. Will that revenue contribution go up or not? That's what we'll ask Naveen. And also, apart from these important outlooks, we will be asking important launches and acquisitions. Also, these are the questions we'll be asking the management. And let's give you the final rating for the KYC for the company. Income statement has been decent, but remember, Q3 numbers is the winner here. Balance sheet very strong, especially on the cash balance front. Cash flows decent. Return ratios and shareholding, that's where my concern comes. But there is some alpha emerging as well. And from where this alpha comes, it's the valuations. It's the outlook. These both have done really well and have given a thumbs up. So let's combine the entire KYC rating and give a total final rating of 4.5 out of 8 when it comes to Bajaj Consumer Care. So this is what the total show is all about. But now we'll talk with the management, and we'll try to understand, how things are moving. And one by one, we'll get in Naveen. He's the managing director at Bajaj Consumer Care, but a little bit of trivia for Naveen definitely is there. He's 20 years into the industry. He has been there. There is PepsiCo, Asian Paints, and importantly, he has been the ex-CEO of Unibic Foods as well. So you see the street cred, he's very strong, when it comes to his leadership. Look at that, 3 companies, including Marico as well, and he's an MBA from IIM Indore as well. Joining us is Naveen. A very good afternoon to you, Naveen. A very nice numbers in Q3 coming up. And what led to this growth? And this is a significant growth coming in. Any inventory adjustments are there? And what are the factors which led to this growth? Naveen?
Thank you, Shraddha. Pleasure to be here on your show. So there are no one-offs, or there are no exceptions to be explained for this performance. I think the seeds of this performance have been grown, sown in quite back, and there's a lot of cumulative work internal to the company which has happened over the periods of past few quarters, which is culminating into this performance coming in. As I've spoken before, what we are doing is that we are getting our focus back onto our core of the business, which is almond drop hair oil. We are focusing on strengthening the brand. We are spending more advertising monies, behind the core brand, and fueling and driving, the advertising reach and frequency there. We've also been working on distribution and building up a much more robust direct distribution network, which again comes back and really helps and enables, our core brand and business performance. And I think the seeds of this have been sown in over the last few quarters, and all of this is now kind of really coming together. What I must also acknowledge is that we are seeing, the overall consumption environment improve and the consumption coming back, which is a culmination of, the real GDP is improving, a lot of stimulus, from the government, the inflation overall rate coming down. And I think all of this is leading to, really a sweet spot for consumption growth. And I think we've done our work and we are ready to kind of capture this consumption growth as it is coming.
Well,
So
yes,
that's how
Naveen,
I would
yeah.
want you
Naveen,
to
this
get a
seems
sense.
a very strong point you have made on India's consumption growth, and right time your Q3 numbers are going strong. But there's a third important thing which is, I've studied, that's Arohan. It's a kind of a strategic program. I think the phase two starts in 2026. Can you just give us some details about it and when the incremental benefits start coming in? I presume in the next 12 to 18 months, more incremental benefits will come.
So what we've done is, Sharad, we've already executed Arohan in the top 8 states of the country for ourselves. And what we are doing as part of Arohan is that we are restructuring both our urban and rural reach to improve our direct reach and to, kind of ensure that we are doing justice on both the quantity and the quality of reach. In most of these states where we've worked, we have seen an improvement in direct reach from anywhere between 20% to 50%. And at an overall level, at a country level aggregated, we've improved our reach by more than 10% in terms of the direct reach moving ahead. What this does is that this improves not only the quality of distribution, but also brings in predictability, brings in ability to execute new products, brings in the ability to sell a better range of the core brand, more SKUs into the shop. And we've already executed it for our top 8 states. And for the balance of the states, we will do it over the course of coming 4 to 6 quarters. So the benefit
Yeah.
of 8 states is already coming into the PNL in the quarter, and the balance incremental benefits will come in as they get executed.
And Naveen, the exact breakup was not given in Q3 about the volume and the value growth. Is it possible for you to share the numbers, what has happened? Because generally
So
we track these companies, we always look out for that volume and the value growth.
so you'll be happy to note that Almond Drop has grown double-digit volume. And the balance spread between the overall standalone growth of 20s to you look at the volume is coming on back of revenue management. There's been some strategic pricing which we took in quarter 1 of this year, which got the benefit of which also came in the last quarter, and certain mix changes which we've been driving very relentlessly over the past few months. So that basically is the the gap and the there. But it's very solid double-digit volume on back of which these numbers have come.
So a strong double-digit growth coming in for the almond segment. ADHO, to put it in perspective for our viewers to simplify it, it's almond drops hair oil. Apart from that, Naveen, query is on the GST benefits. Of course, Q3 couldn't capture the entire benefit, but Q4, can we see more benefits coming in because of these GST cuts?
I think we see, a very significant improvement even in Q3. Uh, I guess as the benefits start reaching the consumer, this should only hold stroke improve as we get into the next quarters. So the macroeconomic tailwind, I think, has started, and at least in our portfolio in our business, we've seen that tailwind come in the last quarter, and we expect it to continue.
Right. Naveen, but what about the rural demand? Is it fully recovered yet, or the signs of green shoots are there? Because whenever a rural demand kind of picks up, it's very strong for your stock. So what's your view on that?
So we've seen a very sharp recovery in rural demand for us because while you would have seen narrative of certain other companies, they have indicated a strong rural demand even in quarter 1 and 2. However, for us, we were undergoing a lot of transformation of Project Arohan in the rural markets in quarter 1 and 2, and hence our rural was muted in quarter 1 and 2. As those transitions have also got completed, plus the entire tailwinds of rural and rural, we've seen a very sharp upswing on rural for us particularly. I think the kind of upswing we've witnessed might not be an industry-wide phenomena, but definitely there is more tailwind across both urban and rural.
Right, so that's a very positive view coming in. But looking at the raw material pricing trends, it's largely looking on the lower side, and the margins are at 18% right now. EBITDA margin, the calculated ones which I have done on the analysis. Naveen, these margins, will they be sustainable going ahead? And if yes, what will be the triggers for it? Because the costs are benign in the raw materials which you use right now.
Yes, we expect the costs to remain very range bound. In fact, if you were to look at it, copra, I think, should be deflationary going forward. Mustard oil and LLP should remain range bound from where we are. Um, I believe, in terms of a longer term, medium to long term direction, looking at the next 4 to 6 quarters, our aspiration would be to move into 20% plus kind of an EBITDA margin. And that is what we will have an endeavor to. Compared to the past 2 3 quarters, we coming to 18 and a half has been, a sharp correction over our previous last year numbers. However, the journey of the balance would be slow and gradual, and we hope to, reach what we'll call as an FMCG standard, the grade one company standards, which is anywhere upwards of 21%.
Right. So a long-term target is coming 20 to 21% for margins when it comes to Bajaj Consumer. Naveen has stated that's a very, very important point. But Naveen, I have some more queries and I looked at the cash balance also. That's significant right now. And just the query comes in, apart from the marketing expenses which you have taken, that's fine, fair enough. But shareholders, do they get any kind of benefit, any dividend in the offing, or are you keeping this money for some kind of an acquisition? Because a lot of D2C acquisitions are taking place as well. Hair brands are there. Is the company looking at either of these two things right now?
So, Shara, the quarter back, we executed a buyback wherein we gave just short of around close to 200 crores back to the shareholders. And, our promoters did not participate in the buyback. And, that's a sign of continuous reinforcement of the promoter to the organization. But we've transferred value back to the shareholders by doing a buyback just a quarter or so back. At this point of time, we want a certain number of reserves, which allows us the flexibility to, go ahead and make acquisitions as and when we get the opportunity. Once we cross again the kind of reserves we want to, we will, think about how to, give the benefit back to the shareholder if we cross that number. But as of now, we've just executed and buyback in the last quarter, and that's what I would want to reiterate.
Okay, so management is reiterating that the buyback has been already done. Nothing major announcement coming for the shareholder as of now, right now. Of course, keeping that money for acquisitions at a level which they think would be right. But Naveen, another query is definitely there on the market share. Currently, after this Q3 numbers come out, which has already is out, ADHO and the non-ADHO segment. If you could just give us a ballpark figure, where does the market share currently stands? I presume there has been an increase in the market share of at least the ADHO segment.
Yes. So if we look at the overall segment, which is coconut oil plus hair oil, we have a high single digit market share in the overall segment on on the basis. And what we've seen is we've seen a sequential improvement and gain in market share, specifically on Almond Drop, which is our lead brand and where we are focusing right now. So there's a very strong positive market share gain in Almond Drops, that too on volume basis.
Yeah. And Naveen, apart from this, you have been a stalwart in the FMCG industry with more than 2 decades of experience. And just the query is for the FMCG industry, what are your budget expectations? What do you want from the government?
I think the government, we have is very consumer focused. They're very conscious. They're also business conscious, and the set of actions which have happened not just in the previous budgets, but in terms of the run up over the last few quarters are all consumption enabling. They are keeping the mind, the Aam Aadmi into focus and ensuring that they are able to increase their standard of living, improve their standard of living, and keep the inflation in check. So I'm sure the government will keep these factors continued in mind, and the budget will reflect that. So hoping for this trend to continue and the government to enable a positive consumption environment and control inflation. So I guess that's the way I would want to put it.
Well, that's a very important view coming in from Naveen. But hold on, Naveen, we just like to revise the KYC ratings which we have given in our show. Just to put in perspective, the numbers were very strong in Q3 and there were no one-offs. The management has just clarified that balance sheet is very strong, especially the cash balance. That's what I'm looking at. Cash flow is also decent. Return ratios, they will come in time, but right now there are some concerns. Shareholding, the promoters have increased their stake, and of course that's a way of buyback, and that's where the strength comes in the stock as well. And street cred, now you see, of course, stock has moved up a lot, so on the higher side the street cred, but valuations and outlook, that's where the real growth lies, and I've given this 4.5 out of it on the higher side on the ratings which we given. But thanks a lot, Naveen, to give the entire perspective of the stock and guidance going ahead for the industry as well. A really strong performance in Q3. Wish you best of luck for the future, and thank you very much for joining in KYC. Well, yes. So that's the guest from the management from Bajaj Consumer, Naveen. He spoke about the company and impact was there in the KYC show as well. Thank you very much for watching KYC. Stay tuned to NDTV Profit.